I think people do have this um, picturesque vision of what retirement looks like, but they haven't necessarily thought about it on a day-to-day basis. How are you going to spend your time? And what is that going to cost? You're right that there are some expenses that will go away when you stop working. Maybe you don't need a second car if you've stopped working, right? Perhaps you can get rid of a car. You don't need a second car. That's great. Like you're getting rid of an expense, you're getting rid of the driving. Maybe you definitely do need to keep that. And maybe you're also adding on a golf membership because you're going to play golf every day because that's the thing that you want to do on the weekends that you don't have time to do during the week because you're working. And so now you've got to add 500 bucks a month or 1000 bucks a month or something to the expense profile that you're going to have in retirement that you need to start planning for. And so, I think this exercise of like really thinking about what you want to do with your life after you retire or after you step away from the current path that is funding your lifestyle and move into a different direction, it's a really good exercise to do. And you can, y- you can think about what those expenses are in multiple different ways. And people, like I said, if there's like just a kind of a easy momentum of saying, okay, well, my current lifestyle is this. It's not really going to change. Yeah, I'm going to have 30, 40, 50 hours uh, extra a week to read and do crafts around the house, do some, yard work and build things or whatever. It's like, you're probably not going to really add all that much expense. But if you're going to be going from a week or 2 weeks of travel every year to traveling for a good portion of the year, well, perhaps that adds a different expense burden. So that exercise of helping to understand what that looks like is going to be helpful for you to figure out exactly what the target is that you're going for.
Really interesting, the expense side of it. Um, Another question, just for me to put in there, not to forget it, because I might forget it otherwise. How do you have any of your retirement thoughts changed since Strategy came out with Stretch and Strive came out with Seda, as they provide income and potentially bring more stability into a retirement thought?
Maybe around the margin, um, but only to the extent that. So here's how I think about this. Um, Typically speaking, I do not advocate for investing for income. I'd rather invest for total returns. I'd rather have more wealth over the long term, even if that comes with more volatility that I can draw from, because it allows me to do more things, right? If my wealth is compounding at 25% per year over the next 20 years because I own Bitcoin, and you can debate what that actual compound annual growth rate is going to look like. I tend to think 25% might actually turn out to be conservative, even though we're going through this period where it's feels like feels like that's aggressive. Um, but if you talk to the power law guys, by the way, they'll say, "Oh, 25%. That's way too aggressive. The power law has diminishing returns." Yeah, yeah, yeah. Okay, great. Fine. Believe the power law. But by the way, the power law says that Bitcoin's going to grow at like 34% over the next few years, and then it's going to drop down below 25% like 15 or 20 years from now. So actually, I'm much more conservative when I say 25% than they are, but that's a little bit of an aside. I'm just poking a little bit. When it comes to a comparison there of 25% versus 11.5% that you get, or 13% that you get from SEDA or from STRC, which might be a little bit higher when you adjust for the taxes, it still doesn't actually compare. So you get this like even returns, but you're giving up total wealth over the longer term. And I would prefer to have more total wealth. I think a better comparison is like, okay, if my view of the way that I want to build my portfolio is that I want stock exposure and Bitcoin exposure in that long term piece of it, well, maybe some portion of the stock exposure should go to something like an STRC or a SEDA, because that's a more comparable type of an asset. And it's like, now if my expectation of returns in the stock market is 10% per year with all the volatility that comes with it, or I could get 11.5% per year with no volatility or very little, then now all of a sudden it makes a lot more sense to be putting some portion of that stock sleeve into something like SGRC. I hope this is making sense. But I just don't see them as like really comparable assets. And I tend to want to focus on building wealth compounded at a much higher rate, even if it comes with the extra volatility that is there. And then people will bring this back to, yes, but we need income in retirement. We need to have this. So this is a good way there you can kind of use Bitcoin to fund your retirement. And what I would say to that is, but you can create income through the portfolio by selling it down. And this is the way that or borrowing against it if that's your thing. But this is the way that the traditional FIRE approach goes about things, right? Is that you build up this portfolio. It's big enough such that you're pulling 4%, or maybe a little bit higher if you own Bitcoin as part of that. And even in the absolute worst years and with the worst sequences, you've got an extraordinarily low chance of ever running out of money. And in fact, most of the time, you're going to end up with far more than you need, even if you are actually selling that down over the period and not doing some of these more sophisticated financial tooling where you're borrowing against it and buying other assets and doing all this kind of thing. It's a very simple approach, but it works, and it in my mind, it optimizes for a mix of simplicity and maximum total wealth over the lifetime of your retirement, and then on into the future when you're passing down your wealth to your family.
Yeah, it's scary to be in Bitcoin, but it rewards you because if I mean, it's hard to imagine the exponential growth of reinvesting 11.5% versus getting 25, 30, 20%, whatever it is. It's not a 2x difference in the end. It's like a 100x, 10x difference depending on the duration of it. It's a multiple of it better than the underlying it, because it's just like it compounds and it really grows hard. So like it's not a little bit better.
And Robin, let's not forget here that the success of Stretch and SEDA depends entirely on the success of Bitcoin going up over time. Like Bitcoin needs to go up at 25% plus per year over the foreseeable future in order for Stretch and SEDA to actually be successful and be able to, continue to return all that. Now, I know what some people will say is like, oh yeah, but they've already got it so over collateralized they could go a long time selling down Bitcoin. Okay, fine. Like that's great. But again, the success of this whole ecosystem does depend on Bitcoin being successful in terms of its price appreciation over the long term. So it's not like these are totally uncorrelated assets in some way, shape, or form.
Do you reject them completely in the portfolio, or you see some kind of other role they could play, maybe in emergency funds, maybe operating cash or something like that, for like medium-term capital that you don't want to have in a more volatile asset?
Yeah, I like it for the idea of an emergency fund. I've written a little bit about emergency funds and think it's a totally overblown concept that people don't need to really be thinking about, to be perfectly honest. Like, you should have all of your money invested at all times. And then if there's an emergency, you've now got a bigger pool of assets that you can draw from to cover that emergency. But if you are going to have some kind of quote unquote emergency fund, I think this is a really good option for it, right? Because it should be relatively stable. It is providing comparable returns to the stock market, and you can sell it down whenever you need to in order to fund those assets. What you definitely don't want to do with an emergency fund is just sit on cash, sit on $50,000 worth of cash that's paying you 0.01%. Like, what are you doing here? This is totally and completely an emotional crutch type of question, as opposed to like thinking rationally about how you're allocating the capital that you've got. I also think there's like, I've done this kind of carry trade that I still have on with STRC, where I borrowed from my HELOC, and I didn't do the entire amount of the HELOC. Like, I haven't maxed that out. It was kind of an experiment at first. The bank that I've got my HELOC from came to us and said, we're giving a promotional rate of 5%. And I was like, great, I'm going to take that 5% promotional rate, and I'm going to draw from the HELOC, and I'm going to buy STRC, and I'm going to make a spread of like 5-6%. And then I'm going to take all of the dividends that are coming from that, or that return of capital, and I'm going to buy Bitcoin with it. And then, assuming that this all works out, I can close the trade at any time. I'll sell the STRC at par and pay off the HELOC, and I'll walk away with kind of some free Bitcoin. So far, that's been working. So even after that promotional rate expired, I still have kept this trade on because I continue to be bullish on STRC and the structure that is there, and the conviction or the commitment that the strategy team has to ensuring that dividend continues to pay out. They've kind of put STRC on a pedal. If you haven't noticed that, like, that's what they're selling to the market. That is what kind of their primary focus is like making sure that STRC is functioning properly, and that they're maximizing their BTC per share, but using that as a primary funding mechanism for their Bitcoin purchases going forward. And so I've developed, some good conviction that STRC will continue to perform the way that it has. And, while the yield that it's paying is at 11.5% versus 7% or whatever I'm paying right now, that's still a pretty good carry trade. It's still a pretty good spread of free money. What I don't typically do, though, is take new money that's come in and then just directly buy STRC. I'd rather just buy the Bitcoin. So this is purely a mechanical arbitrage type play, as opposed to something that is a primary savings mechanism, if that makes sense.
How do you think about that? Sounds like running a business, but I don't find a better term for that. How do you think about operating cash? Like, because we haven't figured out the Bitcoin world. Like, rarely I can directly spend Bitcoin. I mean, there's ways of directly spending Bitcoin, but you still have the volatility. So I personally operate under having around, currently it's a little bit more because I'm moving soon. But usually I want to have like 2 to 3 months of operating cash, just like in literally cold hard cash. And I just experimented with having a very tiny amount of that in small amount of that in Stretch, because I was like, okay, I still want to have it liquid and not being dependent on the volatility of Bitcoin, but like making 0.3%, which I get from the bank, is not that good, and getting 11%, even like I have to pay taxes. I cannot do the deferred tax thing in Austria, unfortunately. So for me, it's like 8% or something like that, which is still like 80%, 80 times better than the banks. And so how do you think about operating cash in general, just like living on Bitcoin retirement, and then maybe also like tie in a little bit Stretch, if that's an interesting strategy for operating cash?
Yeah, I think for like that near-term money that you know that you're needing, you're saving up for a particular, you're putting cash aside for a particular purchase that you know is upcoming. Is that makes a lot of sense to me. So for this moving expense or whatever, that makes a lot of sense to me. As long as you can feel pretty confident that, it's going to be around where you bought it, at the time that you need to sell it, you're not going to take too much of a capital loss or something like that. Which, even if that's the case, it still may be worth it, right? Because you still may come out ahead, even if you take a small capital loss when you sell it, because the dividends that you're getting are pretty high, right? And so that can make up for some of the capital loss that you would get, or that you might be exposed to. In terms of like operating cash, I tend to view this purely as a mechanism for just making my life easier. That if I'm 100% Bitcoin and I have zero cash when it comes time to pay the bills, which are coming out randomly throughout the month, then I've got to sell Bitcoin to pay it. I've got to use like some of the bill pay stuff like Strike has, which is really cool. And I use that for my newsletter business, but my newsletter business has a whole lot less transaction frequency actually than my than my personal balance sheet does, or my personal finances. And so now all of a sudden I've got to account for all of the little tiny movements and all of that. Like, you're right. We're just kind of not in the world where the majority of people either accept Bitcoin or that the tax code is friendly enough to be able to handle that. And so for just simply ease of use, I will keep a small amount of cash in my bank account that's earning nothing. But it's strictly to like just grease the wheels of paying my bills. Anything over and above that, I want it to be working for me, right? I want it to be building toward that financial independence that I'm working toward. And I'm okay dealing with, like, volatility is not the problem for me in that calculus, I guess is what I'm getting at. The volatility of the Bitcoin price is not the problem for me, because I on average, it goes up every day. Right. So, yeah, there may be volatility to the downside. Well, then you can claim a little bit of a capital loss, but a lot of times you're going to have volatility to the upside and you're going to have a gain. Those things are going to kind of offset to the point where you have a net gain over a long period of time. I'm just not too worried about that issue. It's more just about, like, how do I make my life a little bit easier when I'm dealing with the bills that I need to pay.
Thank you for watching this video. This was only a snippet of the podcast. And if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.